All right, you guys, good Thursday morning. Always, my favorite day of the week. So excited to see so many of you here. The calendar turned over and it's October. More pumpkin spice and pumpkin everything, right? Love it. This morning we have the privilege of having Jason Bible with us. Jason has been a longtime investor and money man. He is someone who helps us find monies for deals, right? Jason, that's your specialty.
That's what I'm good. Finding deals and money. That's it. I'm not the construction guy, so if you got construction questions, ask Rob.
Gotcha. Yeah. So Jason and Robert Orfino partnered together. Robert introduced me to Jason, and Robert also runs a construction company, and his wife is a realtor, and they work hand in hand. So, Jason, I'm going to turn the mic over to you and let you do your thing. I'm going to spotlight you here. There you go. Everybody sees you in the center of the
Perfect.
screen.
Well, I'll tell you this. I haven't bought a castle before, but Awa, I
Oh.
literally Google search castles for sale. Just in England, I was just curious what do they got in England? You could pick them up for like 800,000 pounds, which is probably 1.2, 1.3 million, somewhere around there. I'm kind of surprised they're that cheap because land ain't cheap in Europe, right? Um, so I haven't bought anything in Europe before. I've looked at stuff in Mexico, but most of the stuff I buy is here in Texas. So I'm a real estate investor. I've been an investor now since full time since 2013. I've raised hundreds of millions of dollars at this point. Um, I started a house flipping company back in 2013. We flipped anywhere between 70 and 150 houses a year. So I've done about 1,000 deals. In 2018, I sold that company. In 2019, started buying commercial real estate. We've got 7 syndications and funds, and we've actually closed all those but one, and we're in the process of selling that one right now. Most recently, I just did a 128 unit self storage facility, so completely rehab that. And truth be told, it would have been easier if I just did new construction. That's a whole that's a whole nother story on self storage. But like I said, raised hundreds of millions of dollars, done a gazillion deals, mostly in Texas. And lately, what I've been doing a lot of is I've been consulting with developers and other investors on raising capital. In fact, I'm going to be in Austin next week, working with a firm that they want me to set up a essentially a um, for lack of a better word, a deal room, like something you'd see in one of these Wall Street movies, and they want to raise $100 million a year. So we're putting together a team of 8 folks, and I'm going to help them put that together. But like I said, my specialty is really in fighting deals and raising capital. If you've got project management questions or what kind of paint or how to drywall, and I'm not that guy. I mean, I know how it kind of works. I've done enough of these things, but really my specialty is on the finance side and finding deals. I talk to investors every single day. In fact, I was chatting with one last night until probably midnight, sitting out. We actually live on a lake here, and we got a little fire pit in the backyard. Sitting there in the fire pit with a beer in one hand, texting back and forth with an investor that wants to meet because they need to raise more capital. Capital is going to be the biggest challenge over the net for the rest of your career. I'll just tell you that right now, and I'll tell you why that is. You have probably heard that this is the generation, this is the time period in which the most amount of wealth will transfer from one generation to the next. That is absolutely true. You may have also heard from Elon Musk, actually seems to be the one that's talking about the most. We have a demographic crisis in the West. It's interesting. We've got some folks here from Europe. Europe is dying. I mean, Europe is going to be non-existent in 20 years. We're just not having enough babies. I mean, that's the problem. We ain't having enough children. And the first place we're going to see it is actually in South Korea. Is actually going to be the first place. And it's if you are interested in this topic, I highly recommend Peter Zion. His last name is spelled, I think, Ziehman. Uh, Peter's a world-renowned economist, and he talks about this issue greatly. Our economy, the world economy, has expanded based off of one simple principle, and that is having more babies, baby boomers, right? Having more babies. And when we have more people coming in every year, we create more resources, create more money. There's more transactions, there's more deals, there's just more of everything. We do not have an economic model for a shrinking world. We just don't. So, what that has done is it has made capital much more expensive. Meaning, as you get closer to retirement, and I've noticed there's a couple of y'all have a little bit more of this here in your hair than I do. You guys will know as you age, you become less risk tolerant. You move your investments into less riskier things, and less riskier things is stocks, is going from stocks and mutual funds and all that sort of stuff to bonds and treasuries, that sort of thing. So typically people are divesting from the capital markets. Now, I work with people every single day. There are 44 million accredited investors in the United States. There's a ton of them out there. So there's still a lot of accredited investors, but that capital is going to become more and more scarce as the world ages. So I'm open for questions. That's kind of my background. That's what I'm doing now. And like I said, we just work with a lot of people who are raising money. In fact, I took a meeting yesterday with a hard money lending company that wants to raise more capital. I work with a ton of investors, ton of developers. Down here in Texas, we're a little bit insulated from what's going on in the rest of the world, in that Texas and Florida are just growing like wildfire. And I don't think that's going to change anytime soon. Although, when it's summertime here, my God, I can't wait to get out of this state. It just gets so damn hot. But aside from that, it's a great place to live. So I'll take y'all's questions. Debbie, I mean, I assume that's kind of how this works. Do you got some questions for me, or how do you want to go?
Well, first things I want to do is, not everyone on the call may know. What's the difference between traditional lending, mortgage, that kind of thing, and hard money lending?
Great. So you will sometimes hear the term asset-based lending. That is not true. There's no such thing as asset-based lending. When someone tells you asset-based lending, they're already lying to you. I hate to say it like that, rough, but typically it's short-term loans that are not backed by the federal government. You'll hear them sometimes referred to as non-QM loans. Could be loans, could be equity. It really doesn't matter, but it's just non-bank financing is probably the best way to put it. So if you were to look at the world of capital, there's a couple of different ways you can raise capital. One is banks, and you can do that through a mortgage broker or a mortgage bank. There are hedge funds, and I've worked with a ton of hedge funds. There are family offices. If you go to any of these conferences, everyone wants to be around the family offices and the hedge funds, and I've worked with both, and I can tell you it's a complete waste of your time most of the time. But anyway, that's a whole nother story. There's about 7,000 family offices in the United States. Let me explain what a family office is. You have to have a net worth of about $30 million or more to really have a family office. And all a family office really does is manage the assets of the family. Typically, there's a lawyer in there, an accountant. There'll be some sort of deal maker guy or gal. There'll also be some assistants in there that manage, the houses in Texas. They may have a chateau there in London. They kind of the car collection. If you guys are familiar with Jay Leno, he's got a whole team that just manages his car collection, right? So that's what a family office is. And then kind of lower on that tier is high net worth and ultra high net worth individuals. This is the vast majority of people I work with. They've got a net worth above $1 million. Typically, the people I'm working with have a net worth somewhere between $5 and about $15 million. And they're looking to diversify their portfolio and expose their net worth to real estate. That's really kind of the overarching of how the capital world works. And we could talk about any of those if you want. Like I said, I've worked with all of them. My preference is to work with individuals because the family offices and the funds and stuff can kind of be a pain in the butt to work with. But in any case, that's the fun world in a nutshell.
Excellent. So, Jose, do you have a question?
I do. One of my friends contacted me last night, as a matter of fact, wanting to open up uh, you know, oh my God, I just forgot. You know, what he just said. Can you help me?
Well, what's he want to open up a hard money lending company? What's he
No, he
looking to
wants
do?
to. He wants to open up a.
Self-storage?
Yes, thank you.
Oh, okay. Yeah,
In
how
the
much money's he got?
in the Dallas area.
Yeah, how much money's he got? That's it.
Uh,
That's usually where it starts. How much money you got? Um, so
so I've never done one of these before, so I'm listening.
yeah, I'd buy an existing one. You're gonna pay through the nose. I'll just tell you right now, in DFW, much like Houston, if you're buying in that market, you are gonna pay through the absolute nose for something like that. You can develop, you can build new, but you're gonna run into if many real estate investors mistake, how could I put this? Ground up new construction with being a real estate investor. And I've got a colleague of mine. We're about to ink a deal. He and I are both going to do. He's a developer, and I can tell you, being a developer and being a real estate investor are two totally different things. So my recommendation is, uh, you really need a pile of cash first. So let me give you an example. So the one we did down here is in Alvin, Texas, was just south of Houston, about 20 minutes, maybe 20 minutes south of Houston. Um, I bought it for 545 and I put about 300 into it. I'm all into it. Hard costs, soft costs, interest, the whole shooting match for 1.1 million. It is appraised right now at 2.5 million. It was an absolute disaster when I bought it. I mean, it was a big piece of junk. We evicted everyone and essentially rebuilt the thing from the ground up. And big, like if you could imagine a 128 unit storage facility, it's about 15,000 square feet, spending $300,000 on a renovation when it's nothing more than just sheet metal and some insulation and some concrete. I mean, it was a pretty big project. But it's like anything in real estate. I've done so many different things in real estate and they all make money. I think you've really got to look back and say, I would really sit back and look at what's my goal? What am I trying to accomplish? And then back into the asset class that best suits those needs. Truth be told, and like I said, and this may be playing to my base a little bit, but quite honestly, the best thing for 99.9% of people out there is single family rentals. Single family is by and far for the small investor going to be way better than apartment complex. Look, I've owned a bunch of apartment complexes, office buildings, self-storage, starting to do some development work, but for 99.9% of you guys out there, the little single family homes in and around the neighborhood that you know best, which is probably the neighborhood you live in or grew up in, is going to get you where you need to go. Now, if you're trying to make 10, 15, 20, 30 million dollars, that's a whole different conversation. But buying little single family houses is kind of where it's at. But in any case, self-storage is great. Bring a pile of cash, especially if you're in DFW. It's a tough market up there and it ain't going to get cheaper anytime soon.
Excellent. Thanks. Dom, did you have a question?
Yes, good morning. Thank you, Mr. Bible. I am a fledgling broker, investor, flipper. I got a couple houses under my belt and a couple helping other people get started. I'm in the micro market. A lot of my friends and people that I'm helping are in the small house and small funding type levels, $20,000, $100,000 levels. And the people that can't get deals and have small amounts of capital, my thought is to help them become big players and turning their capital into bigger pieces of money, so that eventually they can be bigger players like that you're working with and helping them become big private money lenders themselves. But what are some good stepping stones when they're not even close to ready to being, NMLS type level mortgage lenders and getting all that certification, being an actual mortgage level person? but they've got 20, 30, $50,000 to help land on other projects. What are the, good stepping stones for the, us little people helping other people get to that level?
Well, I mean those are the folks I deal with every single day. So it's um, pooling their funds and then going finding the one of the best scenarios is you find somebody that's a good contractor and you essentially find deals for those folks. Although I would argue this, and flipping houses is not investing. Like I'll just give you the flipping houses is not really investing because you're in and out in less than a year. You're gonna pay tax through the nose in taxes. If you've got a decent little job, you're making 150, 200,000 bucks a year, and then you flip a house, you make $100,000, but you just jumped into another tax bracket, and you're going to pay both sides of FICA and FUTA. You are going to get absolutely hammered for taxes. What I would do if I had a couple friends with 25, 50,000 bucks, I go pay cash for some rental property. It's easy. It's so easy. Just go buy it. Say, hey guys, what we're going to do, we're going to pool. We're going to get 25, 50,000 bucks together. You can do a little LLC. You can do a tenants in common agreement if you want. You don't have to do a big fund and all that nonsense. Just everybody put some money in the kitty. As long as you're all friends and family. Now, if you're posting on Facebook, hey guys, we're going to pool all our money, that's a whole different animal. I wouldn't recommend doing that. But if it's just like friends and family, hey, we got a couple $100,000, literally go down the street and buy. Don't even worry about a deal. This whole I got to find a deal. I will tell you right now, and I used to do this at all these events that we would host. Last event I spoke at on stage had 1,100 people in attendance. And I said, how many would you buy as many houses as you could get hold of 5 years ago, knowing what those houses are worth now? And everybody raises their hands. Everyone gets so fixated on this, I got to find a deal. No, you know what a deal is? Whatever you buy today is going to look like a deal 5 years from now. Period. If you bought at the top of the of the great financial crisis, the GFC, if you bought at the very peak, 5 years later, you were making a lot of money. Now, you couldn't sell those things for 2 or 3 years, but if you look at the trend, if you bought at the very tippy top right before the crash, 5 years later and sold it, you were making money. Mm-hmm. So all these guys get all fixated on timing. I got an MBA in finance, and one of the things that we talked about in one of my finance classes is timing the market is impossible. In fact, you will lose money if you try to time the market. The best time to buy, you guys there's a ton of y'all in here who are realtors, right? When's the best time to buy real estate? Yesterday. When's the second best time? Today. So if, Dom, if I had a couple of buddies, we had a couple $100,000. In fact, I was hosting every Sunday, although it gives you a heart attack. Every Sunday, we host a party at my neighbor's house 2 doors down from here for the Houston Texans. And of course, if you guys are watching the Texans right now, it's just, oh my gosh, it's like last season all over again. But anyway, I was chatting with a buddy of mine who I see every now and then. He works at one of these plants over here. He's a supervisor. He's like, man, I got a group of about 15 of us and we got about 100 to 200K each. What should we do? And I'm like, well, you got $1 million and some change between you and your buddies. Go buy 5 or 6 rental houses. Pay cash for them. Like, you want to de-risk real estate? Just pay cash for it. And I know that some of you guys are mortgage folks in here, and you probably don't want to hear that, but the reality is like, man, that takes a lot of risk out of your first couple of deals if there's no debt on it. So I would, Don, what I would do is, if I were a small-time guy, 25, 50, 100,000 bucks, I'd get with a couple of buddies. Let's go pay cash for something. Now, a couple of years down the road, what you could say is, wow, this thing's appreciated a lot. We're cash flowing. Rates are going to go down. We know rates are going to go down. It's going to start next year. That's kind of it baked into the meal here. Then go do a 50% refi, 60% refi, and you're pulling most of your cash out. And then go buy another one. But that's what I'm recommending a lot of folks. Like, don't get fixated on finding a deal. I got to find a fixer upper. If you really sit down and run the math on it, the opportunity cost of doing a renovation, and by the way, I have never had a renovation in the 1,000 of these. When we started working on it and went, oh man, we thought the budget was 50 grand. We're only going to have to spend 25. No, I've always had it's 50. Now it's 70, right? It's so there's that capital cost. There's the opportunity cost of holding on to that thing while you're renovating it. When I could literally buy the house next door, pay cash for it, put a renter in there the day of closing. So that's what my recommendation for a lot of like small time investors. Get you and a couple buddies together and just go buy a property or two, and then test out the partnership, and then you could decide to scale up from there, right? You can start using leverage, and you can start your own little fund. You can do all kinds of stuff.
Excellent. Thank you. Susan.
Thanks, Debbie. Hi, Jason. Nice to meet you, and thanks for all of this great information. I'm in Puerto Vallarta, Mexico, so I'm a certified broker here with AMPI and an international NAR member. I deal with mostly Canadians and Americans buying down here, and it's mostly a cash-based market. However, we have a growing cottage industry here because we're in a resort town, so think Venice Beach, California, Virginia Beach on the East Coast, Miami, those kinds of areas. It's very much a secondary cash-based market. That said, our average cost now for a two-bedroom single family is roughly 500,000 US. So we have more and more Americans coming down here with 250,000 cash, and then they need to finance. We're working with Moxie Global as our premier lending agent for these Americans that can have the credit rating, have the liquidity, or have the collateralized property to be able to get the loan. And it's a long story about how you mortgage these properties. I don't want to get into that, but my question to you is about not only that growing industry, it's also commercial lending down here is starting to mushroom. And I'm seeing a lot of brokers, commercial brokers in the US, tapping their toe into not nearshoring. We're not talking about public storage space or warehouse space up near the border. I'm talking about hospitality, restaurant services, and that kind of growing industry down here. So what are your thoughts on the growing industry for, investing in nearshore commercial and residential?
So I own a tequila brand. So I'm down in
Good for you.
Mexico a
All
lot.
right, I'm in Jalisco, so yeah.
Yeah,
great.
yeah. I was gonna say I'm in Playa del Carmen all
You're
the
on the
time,
East
at least
Coast.
once or twice a year. Yeah,
Yeah.
I'm just for vacation stuff, but I'm in Guadalajara pretty frequently.
Yes.
So
Which is
and
our
that's
tech
actually
hub. That's our Silicon Valley.
Oh
here.
yeah. And in fact, we just got our tequila here. It's a startup. It's the first startup I've been a part of, like kind of outside of real estate. So a little bit familiar with Mexican real estate. So in Mexico, for those and Susan, you're certainly going to be more of an expert on this than I am, but you actually have to set up a special land trust to be an expat that buys within 60 miles of the coast?
55 kilometers of a federal zone. There's 4 different little criteria. Yeah, you're right.
Yeah.
And all of the stuff we want, the beachfront property, that's all in the federal zone.
Right. Oh, of course it is. Yeah. Well, they were pretty, I will tell you, the people kind of say some things about Mexico that you kind of hear in politics, that sort of thing. I'm like, Mexico's got a lot of stuff going really well for it. And I think that federal zone was pretty damn smart when they put that in place, I think in the 70s or 80s, if I remember. So here's my take on Mexico. So Mexico is, at least Texas, and I believe the United States is our number 1 trading partner. That's not going to change anytime soon. So, and Mexico is going to continue to be incredibly important. There's some discussion about this big rail system that they're going to run essentially from Mexico City and a handful of other places right through Texas. So given the current political climate aside, Mexico is going to be the absolute most important country of the United States, period. Like it's not even a question. Canada, of course, for its natural resources, but there's a lot of really cool stuff that's going on in Mexico. So I think there's a lot of opportunity there. Now, going down there and investing, that's kind of a whole different animal. Because the legal framework alone on how you get that done is going to be a challenge. Now, light industrial down there and industrial is going to make a lot of sense, but I think the folks that are going to be doing those deals and making those moves are big. They're going to be big players because you're going to need a whole. I can tell you, just bringing my tequila into the United States, I had a legal team here in the United States. I had a legal team in Mexico. And we're just talking about some alcohol. Like it really wasn't that, it's really not that complex. But setting up and investing in particularly industrial, because I think that's what's going to happen in Mexico is we're going to see this massive expansion on the industrial side. Um, Getting all that legal framework in place is going to be a challenge. But from a small time investor, I don't know. It's going to be kind of tough. I'm not. I'm. There are so many for folks who've got 10, 15, 20 million bucks. There's so many great opportunities here in the United States versus going down into a whole nother country. In fact, a lot of investors, I tell them, with the exception of the folks in California, New York, and probably New Jersey and some of those other states, for those of us down here in the Sun Belt, I'm like, dude, you don't need to go do some fancy land transaction in another state. Just like literally especially for investors like in Texas and Florida, there is enough to become a billionaire just in the real estate in these markets. So, but I think Mexico is going to be freaking awesome if you can figure all that stuff out.
Yeah, you had said something about the residential, put your LLC together and get 10 people and you've got 250,000 and invest in something. And there's a lot of that going on down here. I've got a client that has 44 Airbnbs along the coast that he's been buying up for the last 5 years, and he's paid under $200,000 cash for each one. And he's getting an average NOI on each one of those of 30,000 US a year. And it's cash. It's all cash based. So anyway, that's what I was curious about more than the commercial side. That's the big money stuff. Both of those industries are blossoming, but it's the small cottage, one-time investor. I want a vacation property, but then I want to monetize it throughout the year. So that's what Moxie Global is focusing on. They're based out of Texas, Houston, I believe, and they're lending to Americans. They're putting themselves on the title. And that's how they're capitalizing it and collateralizing it. So I was just curious if there was any focus at all for you, or if you knew of any other programs that were looking at
No,
Mexico.
that's such a niche thing, and my guess is if you look at those loan docs, because I have no idea how foreclosure works in Mexico, but here's what I can guarantee: it ain't fast. That's probably anything you have to do with the legal system there in Mexico. It takes a little bit longer. But my guess is if they're expats, they're tying a lot of that collateral that's actually here in the United States because they can actually get to it. Um, that would be my guess. And go back to your guy that's got all those Airbnbs. I mean, that's $8 million portfolio that he paid cash for. I mean, yeah. I mean, if I lived in a market and I was applying a bunch of cash into one single market, it makes total sense. But or like you said, like with a lot of your clients, there's a gal I work with in Playa del Carmen. Every time I go down there, I look, and she's Canadian, which is funny. It's all these Canadians and Americans that are down there in Mexico. And I think the other thing, and Susan, you could definitely share this with the group. Mexico ain't cheap anymore. Like it ain't cheap. Like when we go out in Playa del Carmen, it's just like going out in Houston. Like it is not cheap. So where the condo we stay at, there's an Apple store right here, and then there's a Tesla store right there. Like it's just like it reminds me of the United States in the 90s. That's one of the reasons I like Mexico so much. Like I don't know what it is. It feels like the 90s down there. But in any case, yeah, I think that's more of a niche thing, and I'm not familiar with any the stuff I had looked at down there. We were just going to pay cash for because, like you said, getting a mortgage is not really, the United States is unique in that, based off a certain amount of criteria, then you can go get a loan. In Germany, you essentially set up a fund at a local bank for 5 years. They want to see you make 5 years worth of payments, then they give you a loan. So Canada's got weird mortgage laws, and so is Australia. So one of the reasons the United States is so great is our mortgage laws are pretty cut and dry, and they really do support home ownership. So
Excellent. All right, we're going to take one more question so that we have time for breakout rooms. Cassandra, you're up. You have to unmute first, Cassandra. We can't hear you.
There we go. I said, sorry, it's early here. I'm in Scottsdale, Arizona, so just getting ready for the day. You had tapped into something earlier about how investors are not the same as developers. My end goal is to be a developer here in the greater Scottsdale, Phoenix area. But I have this I don't know, maybe limiting belief is that I have to learn the investor side before I can graduate to a developer. Can you touch base on that or thoughts on that?
Sure. Let me tell you how to be a developer. You need to quit your job and work for a development company.
Okay.
I'm dead serious. Like that, the successful developers I know, and I'm going to be in Austin next week working with one. They have $600 million in projects on the books. They need to raise $200 million over the next 3 years. All of the, and I'm just going to use their guys, they're all dudes, right? All of those guys are former developers. All of them. They all have 20 plus years experience. If you're going to be a developer, no one is going to give you a penny until they see you've got develop experience. I don't care how cheap the land is. I don't care how great a deal it is. Development is an absolute monster. Like just getting the entitlements, depending on what market you're in. Like I work with a guy right now. The entitlement process in Austin, Texas is absolutely insane. You literally have to know the mayor. Like it's that kind of craziness, right? So if you're going to do development, you need to go work for a developer. I don't want to
Okay.
crush anybody's dreams, but that's just the reality of it. It's extremely complex. Heck, I was in a meeting the other day about and I was just the money guy, right? Sitting in the corner, listening to them about setting up HOA. And then they started talking about tiers, which are those tax credits. They have entire lawyers. That's all they do. Like they do this one thing in development. So if you're going to be a developer, I'm not even joking. Like quit your job and go work for a development firm. That is the path of most likely success is to work for a development firm because you're going to need all those contacts and it's hard to get them just kind of on your own. That's
And
what
I am currently a realtor, so like doing that would not be
I
out
mean,
of the box for me.
yeah, I mean, being a realtor is, kind of selling product, but like I said, I'm trying to think of a good analogy. It's kind of like, hey, I sell cars, therefore I want to start manufacturing cars. Like that's completely different, like way out. Like the amount of expertise you need to make to have to build a car. Like it's crazy complicated and it's rife with regulations. And so, like I said, if you really want to do development, go work for a developer. Now, if you want to go build some single family houses and infill lots, I think you said you were in Phoenix, Scottsdale, which is a fantastic market. We have a little mastermind group and we meet in Phoenix every year, or Scottsdale. And I absolutely love Scottsdale. It's a great town. If you want to go buy some properties and then build some infill lots, you're not really a developer. You just build new homes. I mean, that's kind of no big deal. But again, I mean, that's different than being, a real estate investor. And I'll tell you this most successful folks that I know that do that, they typically bought those lots 5 years ago. Like when you see all that development going on around town, they typically own that for 5 or 10 years. So, like I
the
said,
area has gotten really expensive over the
Yep.
last 5 years, so that's another concern of mine. I do own multiple single family rental properties,
Mhm.
but just taking that leap into the development side is a little intimidating. So
Yeah, it's really complicated. I don't. When people send me development deals, I host an event here in Houston. We have a happy hour if you guys are familiar with Houston, it's in the energy corridor at the Beltway and I-10, and I'm hosting it tonight. And I'll have a bunch of brokers and all that. They'll show up and go, hey, we got this like 25-acre plot. What do you think? And I have two really close friends of mine that I've done a podcast with before. One of them's Sean Harvey, and Sean is he's the COO for Lee and Associates here in town. They're the largest industrial brokerage in the state. And then Corey, the other guy, is a developer. And so when someone says, hey, I got 25 acres here, I'm like, great. You see that guy right over there? Go talk to him to ask him if it's a good deal. And Corey looks at it in 2 seconds and goes, no, this should be $5 a square foot. And you can't do this because of it. Like he can literally look at it and go, I can already tell you there's a utility easement here. There's going to be this. There's going to be in 5 minutes. And this guy's got 20 plus years experience in development. And that's what you got to have. Like development is a tough game. The last time Rob and I were out in California, we had a guy come up to us and say, hey man, I'm a developer. We're like, oh great. So here's our joke with developers. We ask them this every time. How many times have you filed bankruptcy? And if they say none, I'm like, you're not really a developer yet. Like until you file bankruptcy, because developers make a ton of money and they lose it fast. So if I'm taking any advice from anybody that's a developer, my first question is, how many times you filed bankruptcy? So the last guy we ran into in SoCal, he said, I've had to do it 3 times. And he said, the third time I did it, he goes, I had the house. I can't remember if it was Malibu, wherever it was at, overlooking the ocean, 5,000 square feet. He said, we had all the cars, all that stuff. I went from that to moving in with my wife's parents. Like, that's how much money they lost, everything. But he's back, right? I mean, but development is an incredibly risky game. It is very, very risky. Like I said, if you're just building some single family homes, cool, but going in and doing like real development work, like that's tough. And a lot of developers, I'll tell you, and this is what Corey's business model is. He doesn't even build the houses. He just sells the lots to builders. So they're just doing land development and then just selling it to builders. And he literally has a list of like the top 10 builders. And we're talking about big KB homes, that sort of thing. And they just call him and say, hey, we're looking for this. We need 100 lots here or 50 lots. And then he goes out. He typically has them sold before the project even starts. So didn't mean to crush your dreams there.
No,
on a sober note.
No, thank you for all the information, though. When you meant he develops the land, does he just pull utilities to it and make sure like everything's good on that end, and then he sells it? What do you mean by that?
It is way more complicated than that. It's utilities, it's lots, it's the entitlements, it's the tax credits, it's the setting up the HOA. Down here we have a lot of utility districts. Do they have matching funds? Do they not? I mean, I was going to greenlight a deal down in Corpus Christi, but I would literally have to pull the gas and water 1.5 miles down a public road. So I'd have to get TxDOT approval, which is at the state. Then you've got stormwater issues, like, and I'm sure Arizona has their own set of like crazy stuff, right? God forbid you find any endangered plant or lizard on that property, like that turns into a whole nother thing. So basically what he does is he creates it to where it's shovel ready. Streets are in, utilities are in, it's shovel ready. Utilities are at the lot, and then he sells those lots. Really, he sells sections, probably the best way, but they already have addresses and all that other stuff. I mean, if you're hustling, it's 2 years from the time you purchase it to the time you start selling lots, if you will, or sections to build it. It's 2 years, and that's fast. That's real fast.
All right, you guys, we are going to go into these breakout rooms. I'm sorry to cut you off, Jason, but we need to get in at least one breakout room. So everybody, I'm going to open them now. Let's chat. Let's have a chat about, have you worked with investors? Are you an investor yourself? So that's kind of the opening, the icebreaker for our breakout rooms. So here we go. Everybody go to your room. All right, you guys, welcome back from that breakout room. We have just a couple of minutes. So anyone learned something super cool in the breakout room that they want to share with everyone else?
I just want to say, Debbie, thank you for doing this. And I really, somebody talking, or is it just something else? Okay, I really appreciate it. Just kind of the breakout sessions a little smaller, because we can kind of embrace one another in such a big scale when we're talking to Mr. Bible, which I love his last name. But I just wanted to ask him the hard question in the room. And I raised my hand, but I thought, no, I want to know how many times, like he was talking about, that he failed before he made it big, or what not to touch because of. There has to be a story, and I want to hear it on how many times, because I'm chicken to even buy any property and land or any of that right now.
Well, I gave a talk earlier this year. I'm in the middle of a fun lawsuit right now with an investor.
Oh, wow.
And we caught them doing some stuff they weren't supposed to be doing, but that's a whole nother story. I did a 3-hour talk beginning of the year, this year, just on lawsuits and all that other fun stuff. But our loss ratio typically runs about 1%. So I buy 100 houses a year when I was buying a whole bunch of houses, and I'd lose money on one. So we were very conservative. We probably could have bought 5 times as many houses if we were willing to take more losses. But I will tell you and I lost a truck ton of money to the tune of about $15 million over the last 2 years. And this is what I'll tell you, the couple of big things I learned. When you're working in funds and syndications and you have a capital call, which happens from time to time, right? Everybody's got to put some money in. Let me explain what a fund and syndication really is. It's a giant partnership, right? So when you go to your partners and say, hey guys, we all got to kick $1 million in, I will put my money in last. That is one of the biggest lessons I learned, is because I was like, hey guys, we got to have a capital call passes. I put my $500,000 in, and then I'm like, hey, wait, you guys voted for the capital call. Where's your money? So that's probably the biggest lesson.
Okay.
And that's just a partnership thing. If you're just going out and buying a house to flip and all that, I mean, it's hard to, man, I'm going to say this. It's hard to really screw up big time, if that kind of makes sense, right?
Okay.
Worst case scenario is you just got to hold on to it longer. Real estate, like relationships, time heals all wounds. So if you just give it some time, it'll turn itself around. If you're scared, pay cash for it, or put together a partnership and you guys pay cash for it. Worst thing that happens, you sell it, no big deal. Leverage is what will really cook your goose if you're not moving quickly. But if you go back and look at, what were the biggest failures? I mean, we lost $250,000 on a house once. But I'll tell you exactly what related to that. It was something you could not foresee. We had a house that was not in a floodplain, that was nowhere, had never flooded before. Hurricane Harvey, one of the worst storms on the planet, goes rolling through Houston. They decide to release the water from the Addicks Reservoir, which they had never done before, and it flooded this neighborhood. This was a high-end neighborhood, very high-end. This is $1 million plus house. So in Texas, I don't care where you're at in Texas, $1 million home is a nice home. This isn't like, I do a lot of business in Southern California. This isn't like, $1 million home on in Newport Beach, which is a shack, right? So this is $1 million home in Houston, Texas. And when people buy $1 million homes, they have a choice. They could pretty much live wherever the hell they want, right? So you have a choice. Are you going to live in this neighborhood that just flooded, even though these houses are all being rebuilt and they're beautiful? Or do you live in the neighborhood next door that doesn't have this problem? Well, real simple. We're going to live in the neighborhood next door. So at some point, the price gets low enough to where someone's going to be willing to take that risk. So that was something we absolutely could not anticipate. Another one that comes to mind that we lost a bunch of money on, the houses that need a little work. Like, give me a house that's got a hole in the roof, completely destroyed. Because you walk in and go, this thing's a big piece of junk, needs everything. There's no surprises. We had one house that we didn't know it at the time, but it had termites just behind the kitchen and the wall in the kitchen. We thought, little termites. Well, we started tearing it apart, and little did we know, it's a 2-story house. That entire wall, floor to ceiling, was filled with termites. So we had to pull the entire kitchen out, reframe, put the kitchen back in. And we didn't account for any of that because it just needed a little work, right? It just needed, I can't even remember what, paint, carpet. It was one of those things. So those are the big lessons. If you want to take risk out of real estate, pay cash for it. That's the way to de-risk real estate. Just pay cash for it. Just get you and a couple buddies together, put a couple $100,000 together and go buy something. And then,
all right, you guys,
thanks, Jason.
we are 2 minutes over the top of the hour. So I know a lot of you have things that you've got to get onto, other appointments. Jason, somebody asked me to provide your contact information in the chat.
Sure. Yeah.
Yeah. So if you'd like to do that, please do. For everyone else, make sure you download the chat. If you don't know how to download the chat, Jocelyn is here and has offered to send it to you. All you have to do is type chat and then your contact information, whether it's your email address or phone number that she's going to text it to, whatever. Jocelyn will send that information off to you. So thank you, Jocelyn, for doing that. Thank you, Jason, for being here and sharing your I want to say down to earth grit and wisdom with all of us.
You bet. You bet.
So we appreciate that. And everyone, we will see you all next week. Same bat time, same bat channel.